The idea of a monetary union was first proposed in 2007, and the roadmap set implementation between 2013 and 2024. This hasn't, however, been realized, coming short on major preliminary targets such as customs union, common market, just before the long-anticipated monetary union that offers a regional currency and central bank. All this responds to low commitment, rival member policies, among other factors.
13, it came to effect in 2014, and we gave 10 years for partner states to prepare, to put into place mechanism to make sure that the monetary union takes effect. Of course, there have been very many challenges, including COVID, so partner states have not been able to fulfill the requirements. The roadmap had been drawn, but now the roadmap, we have got now a new roadmap, which we are going to make sure that we put into place, to make sure that we shall be able to attain the monetary union.
Regional commitment has been unequal among its member states. Observed through differences in trade, market, physical and monetary policies, Uganda's commitment, however, remains unquestionable, and experts still refute observation of a slow progress.
When you look at the timelines that had been established, for example, it had been anticipated that by 2024 we will have rolled out particulars of convergence and all those. When now you make an assessment after of course, the signing of the protocol, under Article 23 of the protocol for the monetary union, there was a requirement for the establishment. There was a requirement for the establishment of the East African Community. Before the end of this term of office, I imagine before the end of the Fifth Assembly, there must be a few details that we will watch as the East African Community.
As the East African Community grapples with relentless tests towards the economic union, member states are expected to express commitment and work tirelessly towards addressing such for full economic integration.
Because what you need to know is that East Africa is not yet a country. These are distinct states, completely partner states. And we only cooperate on what we call cooperation areas. So therefore, an area of cooperation is where the East African Community is located. For example, you cannot now run to Congo, South Sudan, or where, and just buy land and begin working, simply because you are an East African. No.
A new roadmap to make sure that the monetary union comes into effect at an agreed time, which the Council will have decided.
And the customs union?
The customs union is what we are in, of course, this issue of free movement of goods within the region.
Act 83 of the Treaty of the Establishment of the East African Community, the monetary and physical policy harmonization, underlines major considerations where partner states will undertake to adopt policy measures in accordance with agreed macroeconomic policy framework and remove all exchange restrictions on imports and exports within the community. Maintenance of free market-determined exchange rates exists and enhance the levels of international reserves. Adjustment of physical policies and net domestic credit to the government is overseen to ensure monetary stability and achievement of sustained economic growth. Financial sectors are liberalized, freeing and deregulating interest rates to achieve positive real interest rates in order to promote savings for the investment within the community. And still harmonize tax policies to clear tax distortions and ensure efficient allocation of resources within the community. The establishment of a monetary union would bring several benefits to member states, including increased trade and investment, greater economic stability, and the facilitation of cross-border transactions. However, without significant commitment and progress, the benefits may remain elusive. Lona Nahabwe, Smart 24 TV, Business Today.